So Cassandra says she's been budgeting, reassessing my actual needs versus my wants. That's a good one, right? Also, you know, I think that if you are becoming independent, when parents or whoever are paying the bills, you know, I don't know if you've ever saw that TikTok video where when the parents are paying the bills, you drink orange juice whenever, in the morning, at night, toothpaste, you just squeeze it out like it's nobody, all over the sink, or you're using toilet paper, just reams of it, because why? You're not paying for it. But when you think about the fact that you have to pay the bill, now you're like drinking orange juice once a month, right? To conserve. I always find that session so funny. Anyhow, so Joey says, I've missed the last 2 sessions, but I've curbed my excess spending and have been able to hold on to a little in my bank. Joey, that's why we're here, okay? That right there, recognizing that the way you think about money and that we're influencing that. And then Christopher said he's saving more money. So thanks for sharing, guys. And Myra, why don't you go ahead and start today's session?
All right, thank you so much, Natalie. A reminder, Natalie, because I know you want this reminder out there. If anybody's using these sessions for their passports, you need to have first and last name on your screen, because I'm seeing a lot of just first names.
Oh,
there.
yes,
So,
yes,
yeah.
please. You know, if you want the credit for this session, sometimes I get a verification email from the business department. If you are doing business courses, and they want to make sure that you're here. So Yuting Zhao is saying he's telling his friends to, or her, keep a record of all their expenses as much as possible and see what you can avoid spending on over the course of a week. Great advice.
Nice.
Thank you so much.
All right, guys. Thank you. I'm seeing a few more comments coming. Oh, okay. That's about adding your name. Okay, and I see somebody else made small goals and to take action on their plan, not just doing the plan. That's a huge step as well. So I'm really happy to see that some of the things that we've discussed is working for you guys. You know, if you're learning anything from these sessions, it's a success. So we are going to dive right in. Again, my name is Myra. I will give you my email address at the end of the session. I will let you know, normally we take a break halfway through. I may need to incorporate a break earlier than that, simply because I'm not feeling my best today. But we will muddle through this. So for that, I will apologize if I suddenly go on mute. I'm probably just coughing. And if you have questions and I ask for clarification, you think it's actually a simple question, because I'm not feeling that well, so bear with me. And definitely, this is about your learning, so ask those questions. I can't, you know, make sure that I'm presenting things that you guys actually have questions about if you don't ask those questions. So use chat or unmute yourself and ask the question if you're comfortable enough to. If it's a question that's very personal and you want to email me after, like I said, I will provide my email address, and I'm more than happy to answer questions after the fact as well. So I'm going to share my screen, and we are going to be talking about, there we go. There we go. We're going to be talking a little bit more about financing. So in the previous sessions, we talked about budgeting and savings. We talked a little bit about credit versus debt. And we're going to talk about financing. We're going to talk a little bit about how leasing works, because usually your first larger purchase is a vehicle, and one option with vehicles is to lease. We're going to talk about some key terms around financing, the benefits of making larger payments, the difference between the price of something and the cost of something. So that's one that we can have a really good discussion around as well. We're going to talk a little bit about questions you might want to ask when you're buying a car, or a little bit about the process. And again, how to work those bigger or financed items into your budget. And then we're going to talk a little bit about income tax and completing your income tax return. So that's really timely because income taxes are coming due soon and everybody's talking about this being tax season. So let's get started. First, I should ask, is everybody seeing the slides okay? Are slides up there? Okay, perfect. I'm getting some nods, so thank you. Here we go. So what exactly is financing? And I know in some of our previous sessions, we talked about the words credit and debt. Financing can be the same thing. It can be one of those terms that is interchangeable with the other two. But basically, financing is when you borrow the money. So the way to think about those three terms, financing, debt, and credit. Credit should really only be used when you're talking about your ability to get financing. That's what credit is. Or if you have the option for financing already in place, then you have that credit available to you. Debt is when you actually use that financing or credit and you then have to pay it back. That's debt. Financing is really the act of the bank providing you with the funds. They finance that purchase for you. Okay. So those terms, unfortunately, are used interchangeably when they're not really the same thing. And the reason that they're used interchangeably is because debt is sort of a bad four-letter word. Okay. Financing sounds sort of, higher end, so to speak. I'm like, oh yes, they're doing my financing, or I'm having it financed. Well, I'm incurring debt for that is what it really means, right? Credit, again, is a better term than debt. So it gets used, for example, credit cards. Well, when you use that credit card, it's actually a debt. So be careful when those terms are being presented to you and really take a look. Are they using the correct term at the correct time? So for example, a bank can say, come to us, we can finance your mortgage. That's right, they can provide you with the money for your mortgage. Financing, or we can finance this for you, is a verb. We will give you credit for this. Well, that means something different from we're going to finance this for you, but they're used interchangeably. Does anybody have any questions with that? Because it can be a little confusing because those terms are used in ways that they shouldn't necessarily be used, but it's so common for them to be used interchangeably. No, okay. I think everybody seems clear on that. So we're going to talk about leasing as opposed to financing. So again, financing is about providing the funds that you then pay back. Can anybody give me a definition of what leasing is?
Ariana said borrowing for a period.
In a way, do we have anybody who wants to add on to that?
Cassandra said it's close to renting, and Joey said temporary ownership.
Yeah, those are both really close. So think about it. When you rent an apartment, they call it leasing, right? So it is very much like renting. You get the use of the item that you're leasing, but you don't get to keep it. It's not yours. Okay, so when you lease a vehicle, you're basically renting it for a fixed period of time. Normally it's 3 to 5 years. At the end of that, you have the option to purchase it or just return it. However, there are a lot of other items to consider with leasing. And you might ask, why would somebody lease a vehicle as opposed to buying it? Does anybody have any idea why they might choose to lease rather than purchase?
Cassandra said preferred interest rates. Nadia said temporary employment. Carlos said you don't have to pay full value of it. And Joey said affordability or credit availability.
Yep, those are great reasons to lease. Another reason that people lease vehicles, if it's going to be leased through their company, for example, so then it's a better tax write-off rather than purchasing the vehicle outright. But those reasons that you guys gave are fantastic. It can be credit issues. It can be that you don't want to get tied into something like purchasing it outright. It can be credit issues. Absolutely. So you guys seem to be fairly familiar with leasing. There are often many conditions with leases. But we want to talk a little bit about the terms around leasing as well as really any kind of financing. So can anybody tell me what a balloon payment is and how it differs from a down payment?
Adam said lump sum payment at the end of the term, and Cassandra said balloon payment is usually the remaining balance.
Okay, so both are correct. Both are correct. So a balloon payment is like a lump sum or a large payment at the end of the term. So for example, if you lease a vehicle, you lease it for 3 years. What you'll find in your lease agreement is that you do have the option to purchase the vehicle at the end of the 3 years by paying X number of dollars or a value based on whatever. That is a balloon payment. You can choose to just pay that outright. Again, if you take even a loan from the bank and it's say a 10-year loan, however, you have a 5-year term. So exactly what your interest rate and your payments are for the 5-year term. At the end of that, you can pay off what's remaining or make a large payment at the end of that term to cut down what your cost is going to be in the remaining time it takes you to pay that off. Or you can pay it outright. What a lot of people do is they'll lease a vehicle for 3 years. If they really like the vehicle and decide they're going to keep it, they then finance through a bank for the remainder of the cost of the vehicle. How does that differ from a down payment? Did we get any answers?
Nadia said down payment is ahead of time. Ariana said percentage you pay up front. Carlos said the down payment is made at the start.
Yeah, that's great, guys. So basically it's the same thing. If you pay a down payment up front, then you're reducing what the total loan or your monthly payments are going to be, as opposed to the balloon payment that will sort of finish off everything for you at the end of the term. So I'm going to jump down to the bottom financing term, and it is actually the word term. So, because we've been saying that quite a bit. How do you define a term?
While we wait, Joey said creditors are sneaky with fine print. Their girlfriend's parents took an R15 year financing on an RV that required interest negotiation every 5 years. Just a comment that you need.
Okay. Interesting, but we'll get into some of that. It can happen. It definitely can happen. You do have to read your contracts. You absolutely do. So that it actually is great to build on, you know, the definition of term. So a term is the length of time that you have your agreement in place for. So for example, if you get a mortgage and you're taking your 25 years to pay the mortgage off in full, you're going to break that down into smaller chunks because the bank and yourself don't necessarily want to lock into an interest rate and a payment for the full 25 years because interest rates could go up or they could go down. People will take terms within that 25 years, and at the end of each term, you get to renegotiate your interest rate and your payments. So your terms can be 5 years, 4, 3, 2, 1. They can even be 6 months sometimes. Some banks do terms up to 10 years on mortgages. Generally, with any loan that's over a 5-year payout schedule, which is also called an amortization, then you would have a term within that amortization. So again, in that particular case, the amortization was 15 years, but the term was only 5. So they had the option to renegotiate every 5 years. Now, certainly when you take a term, you're going to want to take a look, and especially when it comes to mortgages, you're going to want to take a look and see what you think is going to happen with interest rates. Discuss things with your banker as to what might happen with interest rates. You know, there's nobody with a crystal ball that can tell you exactly what's going to happen, but the people who pay attention to the interest rates and the economies and what's happening in the world have a better idea of what might be happening. So does that explain term for everybody? It's the same thing, you know, you have a semester or a term of school, you've registered, these are the classes you're going to take, that's your agreement for that length of time, and then next term you kind of renegotiate, you choose your new classes, you pay for that portion of your schooling, all of those sorts of things. So term can be used very generally, and in financing means pretty much the same thing. Let's talk a little bit about total price. What's included when we talk total price? Any ideas?
Nadia said the full amount paid.
Yep.
Joey asked to say it again.
Sorry to say it again.
Yeah. Jida said full purchase price. Carlos said price plus interest. Pamela said principal plus interest.
Okay, it can include a lot of things. Your total price can include a lot of things, especially if you're talking about purchasing a vehicle or even leasing a vehicle. Your total price will be everything that you pay up until the end of the term. Generally is the way banks and finance companies or lenders talk about your total price. And we can only talk about the total price based on term because we don't know what you're going to renegotiate after that term is up. Okay, so again, if you have a loan that's over 5 years or even a loan that's only 5 years, but if you have one that say is a mortgage, again, over 25 years, and you choose a 5-year term, we can only give you what we call a disclosure statement, which tells you the total price of what you're going to be paying back to us in the 5 years, because we only have an agreement for those 5 years. So your total price, if we go back to the example of buying a vehicle, it is your taxes, it is your service fees, it is Potentially your motor vehicle inspection. It is any add-ons that you may have. You know, what else can be included? There's surcharges, there's sometimes fees just to get the car off the lot. There can be all kinds of different other costs that you need to consider, because you do need to think total price, not just your sticker price. Okay, so your sticker price could be, let's say $15,000, but when you actually drive it off the lot, you've paid $20,000. That's your total price.
Joey said maintenance as well.
You know, if you're thinking everything that you need to include as far as your budget, yes, 100%, yes, yeah. Or if you're buying a package that includes your maintenance, that would be part of your total price as well. Yeah. Any questions on those terms? No? Okay. So what does it do when you make a large payment? You know, why would you decide to make a larger payment than what is required on your loan, for example?
Brianna said to reduce the interest. Cassandra said reduce monthly payments or lower debt.
Yep, those are great answers. You definitely will save on interest if you're making larger payments. Absolutely. So in the long run, you're actually paying less. Sorry, go ahead.
Sorry. Joey said principal payments.
Yep. So your principal payments are paying back what you've actually borrowed minus the interest. So if you're we can only charge interest on the amount that you owe. So if you're making larger payments on the principal amount, then you're going to pay less interest in the long run. That's a strategy that a lot of people use. I will caution you, I not even caution, it's more of a tip, piece of advice from a banker. If you have the opportunity to take, say, a car loan, and you're going to take it over 5 years, but you say, no, I can actually pay this off in 3 years. My suggestion to you, because through a bank, when you pay, like I just said, we can only charge interest on what you owe. Okay, when it comes to a loan, because it's simple interest. So if you pay larger payments than what's required, that still puts you ahead. However, if you take the 5 years, knowing that you can make larger payments without any penalty, then you can still go ahead and make those larger payments and have that loan paid out in 3 years. But if there's an emergency or something happens in your life that you didn't plan for, so job loss, you know, COVID had happened to a lot of people, illness that you know, comes out of the blue, which it can, you can go back to that smaller agreed upon loan payment without it changing anything. The fact that you voluntarily made larger payments, you can do it or take it away at any time because it's voluntary. Okay. I talk to people a lot, you know, we talk about 25-year mortgage, and they'll say, no, I want this paid off in 15 years. It's like, okay, that's great. But what happens if, you know, we're basing this mortgage application off of 2 incomes coming into your household? What happens if one of you can't work? Well, it would be a little tight if it was on 1 income. However, if we keep it on 25 years, your required payment is only this rather than this, and you can afford it on 1 income. So go ahead and make these payments while you can. But if something unexpected happens, you're only required to make this payment. It's the same thing as what I advised a few sessions ago when we were talking about credit score and that sort of stuff. If you can't make your payment in full on a credit card, say something unexpected did happen, at the very least, make that minimum payment. Okay, so it keeps your credit good. again, you know, a little bit of a strategy. Take what's offered to you, knowing that you can pay more and reduce how long you're going to be paying it, but it's voluntary. And if an emergency comes along, you can drop down to that lower payment and still keep your credit good and have your finances a little bit more manageable. Does that make sense to everybody? Because it can be a little bit confusing. Are there any, like, raise your hands if it doesn't make sense, please. Great. I'm not seeing any raised hands. Are there any comments there?
No, Tian Pham just said that makes sense. Kara said it makes sense and that they think it's very helpful. So,
Perfect.
yeah.
Yeah, because a lot of people, you know, there's like, I just want to get this paid off as quickly as possible. You have that option. Just make sure that you fall within the guidelines of the agreement that you're signing. So generally with a loan, you can do this without any penalty. You can put lump sum payments down on it at any time without penalty. You can pay it out at any time without penalty. With a mortgage, you might be tied into certain what they call prepayment privileges, but that usually includes doubling your payment. So again, you can afford to double your payment, but you don't have to make it part of the agreement. Okay? Fantastic. I'm happy you guys understood that. You guys are great. So we're coming back to price versus cost. Let's have a really good discussion around this. I'd like to see lots of comments. And if you guys want to take yourselves off mute and have a discussion, I would really like to have that. So what's the difference between cost and price? Come on, guys. We talked about total price.
Tian said price is the money you buy, cost is the money you maintain.
Yes, that's very good. Yes. So the price is what you see on the sticker. The cost is what you're actually going to be paying. So in really simple terms, you purchase something on sale for say $200 and put it on your credit card. You don't have the means to pay that off for a few months. What's your actual cost going to be? It's going to be the price you paid for the $200 plus all the interest, right?
Joey messaged, or sorry, Joey said implicit and explicit cost.
There's that as well. Yeah, absolutely. Let's go back to, you know, using purchasing a vehicle as our example. How many of you, show your hands, how many of you have vehicles right now that you've purchased yourself? Are we getting any hands?
No hands, but lots of people are saying yes, so.
Okay, all right. So let's go through this. Do any of you mind sharing what the sticker price of your vehicle was?
Carlos said 6,000.
6,000. Okay, so that's what they were telling you. This car cost $6,000. Do you remember how much you actually paid for it?
They said it was a bit more because they took out a loan.
Okay, all right. What other costs were involved in getting that car under your name and drivable?
Cassandra said add in your taxes and registration plus plate plus insurance.
Wonderful. Yeah, taxes, plates, registration, insurance. And when you say insurance, you talking the vehicle insurance or insurance on the loan you took?
They also mentioned gas money too,
Gas and
and said
maintenance?
both.
Sorry, what was the last part?
They said both in relation to your question.
Okay, perfect. So I'm gonna, that's fantastic. Great feedback, guys. You are right on track with this. So that price of 6,000, and I'm sorry to pick on anybody, but I'm just gonna go with it. So that price of 6,000 is not what you're paying to drive that car away and take ownership of it. You have your taxes, and even if it's a private sale, when you go to register that vehicle, you're going to pay taxes when you register it at Access Nova Scotia. You then have to pay for your plates, the registration, the insurance. Was there anything that you needed to do to the vehicle to get it roadworthy? Did you need to buy new tires? Did the brakes need to be done? All of that adds up to your cost. So your price of 6,000 looks fantastic, but what's the real cost? What is this going to cost you to actually take ownership of this vehicle? So you need to consider all of those things. You can look at the cost as well of what is it going to cost you to have this vehicle for X number of years. And some people do figure that out. They will come up with, a potential, maintenance schedule and look at costs for that. They will consider, how often will I have to buy tires? How much will tires for this particular vehicle cost? I will tell you, years ago, I owned a Jeep Patriot, and oh my goodness, the tires were the most expensive tires. They were an odd size, and I could only get the tires from 2 different places, and they could charge me whatever they wanted because they were the only places that sold those tires. I paid a fortune for tires when I had that vehicle. So when you're looking at cost, to get it on the road is one thing, or to get ownership of it is one thing. There is extra above and beyond the price just to get it in your name. But then what's it going to cost you to maintain it over 5 years or however long you plan on having it? One thing that I wanted to sort of take us off track a little bit was to talk about the insurance. So we're going to talk about vehicle insurance a little bit more, and sort of general terms about insurance coverage. I was asking as well about the insurance on the loan itself. So can anybody tell me a little bit about what you might know, or what you've heard about insurance on a loan?
Cassandra said mandatory.
Not on a loan, not necessarily. But vehicle insurance is mandatory. So insurance on the car is mandatory. Insurance on the loan is not mandatory. Okay. And that actually, that brings up a really good point that I'll bring up when we're talking about insurance as well. So insurance on a loan is what we call creditor insurance. So it can cover your payments or even pay out the loan in full in certain circumstances. Okay, so for example, if you get life and disability insurance on your loan, if you were to pass, the loan, if the claim's approved, the loan gets paid out in full. Nobody else has to worry about paying that loan out for you. Your estate doesn't owe any money at that point. If you have the disability on it as well, then if you're not able to work because you've become disabled, or you're even on sick leave, for example, and your claim's approved, your payments can be covered by the insurance, usually up to a 2-year period, or until you return back to work. But you don't get that money in your hand. That money is paid directly to the loan. So what that does is that protects the lender. We know we're going to get our money, but it also protects your credit rating. The other thing it does is it frees up what income you're still receiving to go towards other things. So you don't have to pay that loan. It's really useful, for example, with mortgages. It's really useful really for any loan. There's usually a place for that type of insurance. And I know a lot of people, especially if you speak to anybody who has a mortgage right now, a lot of people will say, no, that mortgage insurance, it's not worth it. It's way too high. Go out and get independent insurance, life insurance, and it will cover you. In some cases, yes. In some cases, it's not that easy. You really need to speak with your financial advisor about what insurance you have and what insurance is available to cover that loan or mortgage. Okay. So for example, I have all of my lending products insured. My line of credit is insured. I don't owe anything on my line of credit, so I pay $0 for my insurance premium because I don't owe anything right now. If I were to use my line of credit and I did owe money on it, then my insurance premium to protect that line of credit would be based on a certain percentage, a very small percentage of the balance owing. Okay. With a mortgage or a loan, you pay a set premium for that protection of that loan or mortgage. But as the balance goes down, your premium doesn't change. Okay, so you pay the exact same premium regardless of what the balance owing is. Some people say that that's ridiculous. However, if you have insurance through work, especially if it's disability insurance, you could be making, say, $80,000 a year. Your disability insurance is going to cover 70%, usually something less than 70%, but 70% as an example of your annual income. However, they cap that annual income at $40,000. So how would you survive financially if you're used to making $80,000? You're suddenly disabled and you're only making 70% of $40,000. That's why this extra insurance that pays, your monthly or bi-weekly mortgage payment can be so useful, and there can be a place for that. Okay. If, for example, you're older and you're retired and you're living off a pension, doesn't matter what happens to your health, you'll always get the same pension. So then that insurance isn't as necessary. Okay, so there is a time and a place for that type of insurance, but you need to discuss your individual situation with your financial advisor, just like anything that you do with your finances. It's a little bit off topic, but does that make sense? Are there any questions around that? No, we're good? Okay. So any questions around the cost versus price? So price is more sticker price, cost is what it actually costs you to own that item. So what kind of things do you wish you had known when you purchased a vehicle? Is there any bits of wisdom you would pass on to anybody else that's participating today that is thinking about buying a vehicle? We getting anything? No? Okay.
Oh, there we go. Things are starting to come in now.
Awesome.
So Cassandra said, have a garage mechanic check the vehicle before purchasing to avoid extra expenses. Carlos said, consider the mileage, expenses, and the cost of the repairs. And Joey said, buy it outright.
Yes, all fantastic advice. You do want to take the vehicle to a mechanic. unless you're buying it brand new. You know, you do, even if you're buying it from a dealership, you still want to get it double checked. That can be an additional cost. A lot of mechanics will charge a small fee for doing that once over on a vehicle that you're looking to buy. Unless you know somebody, it can be an extra cost. Completely worth it, but it can be an extra cost. And be careful who you take it to. You want to take it to a mechanic that does everything. So for example, when I bought just a beater for one of my daughters, they were asking $2,000 for it. I took it to a mechanic that I knew at a dealership, and he was like, oh yeah, great car, blah, 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 but it needs this and this, which was fine. We took it back, we got a better deal on it. It did need those two things, but it also needed a rocker panel replaced, which, because they don't do body work, they didn't even think to look at. So you want to make sure you take it to a mechanic that does look at everything.
Joey said to go with a friend or family member who knows vehicles because it will help with negotiating.
Yes, and that was where I was going next, negotiating. You want to negotiate the price on your vehicle. Sticker price is not always, even if they say they don't negotiate, there is always room, always room. We'll talk about that in one sec, because I will tell you a story about the last vehicle I bought and the negotiation. There are a lot of tricks to the trade if you go into dealerships. So I'll discuss that a little bit with you as well. So how do you add, a vehicle into your budget or any large purchase? So we talked about budgeting before and some of the things that you'll be putting into your budget. Transportation, you may have had budgeted transportation. You may have been thinking your bus pass or, Ubers from time to time. Your transportation will then be taken over with perhaps gas and maintenance. Your debt repayment will have to change if you financed the vehicle purchase. So you'll have to either expand or retract some of those numbers or some of those sections, but make sure that when you're looking at the cost, and again, look at the cost, not just the price. So you'll be adding insurance, you'll be adding to your debt potentially, you'll be adding maintenance, you'll be adding gas. So you need to look at all of those things, everywhere that will fit in, okay? And it's not bad to do an exercise. If you're looking at 2 or 3 different vehicles, do the exercise with what it would look like if you purchased each of those vehicles. Again, call around to insurance companies, find out how much insurance would cost on each of the vehicles, because your insurance can change based on those vehicles. The mileage or how old it is, even what type of vehicle it is. Again, I'll go back to my poor decision to buy, and I'm nothing bad about Jeep Patriots, it just wasn't necessarily the best decision for me at the time. I was told by my insurance company that they are the most stolen vehicle in North America. So my insurance was a little higher than it would have been if I had bought a different SUV. Lessons learned, but those are things that you should ask about. Why is the insurance higher on this vehicle than that vehicle? But it's worth shopping around for, okay? So shopping for your car insurance. We've already said that, yes, it is mandatory. What is mandatory is that you have what they call personal liability protection. So that means if you get into an accident and it's your fault, your insurance company will pay for the damages to the other person's vehicle. They will not pay for damages to your vehicle. Okay. Then there's enhanced insurance. And if you financed your vehicle, it can be a requirement of your loan that you have the enhanced, or what they call full coverage insurance. That means if something happens to that vehicle, say the vehicle's written off, if you only have the PLPD or the basic mandatory insurance, then you'll end up with a written off vehicle, a loan that you still have to pay, and no vehicle. and no money from the insurance company. So if you have this financed, it's required that you have full coverage so that if you get into an accident, the vehicle's written off, the insurance company will give you the money, the replacement cost of the vehicle, which goes straight to the lender or where you got the loan from. So that money goes on the loan. If there's anything extra, that comes back to you. If there isn't, you might still have a small amount that you still owe on that loan, but at least it's not the full amount. Does that make sense? Does anybody have questions about the difference between those, or why the full or enhanced insurance may be required if you have a loan? No? Okay. What kind of add-ons, for those of you who have vehicles, what kind of add-ons can you get on your insurance?
Cassandra said critical illness. Adam said gap, disability, life.
Okay, you can definitely get those. You can get those through creditor insurance as well. But your add-ons for actual car insurance would be more like accident forgiveness. That's a huge one. They can forgive one accident. You choose a big one, and they don't change your premium because you have this add-on. Okay, you pay like a couple of cents more each insurance payment, but it means if you have a big accident, your premium isn't going to go up all of a sudden because of that. A rental vehicle, if you lose the use of your vehicle, can be an add-on.
Joey said others above $1 million liability, and Cassandra said additional insurance payout.
Yep. Yeah, all of those can be add-ons, and it really depends on where you're going or what company you're going to for your insurance. So one might have it as part of their enhanced policy, where another one considers it an add-on. That's why you want to shop around, and that's why you're going to see price differences as well. Any questions about car insurance itself? And I'm sorry, I should have qualified this at the beginning. I am not a qualified insurance agent. I can only give you advice on this. If you have specific questions about car insurance, please call your insurance company or your insurance broker, okay? Especially when it comes to bankers, there are regulations and laws in Canada that I cannot give you specific advice on car insurance. But are there any questions?
No questions, but Joey said a consumer perspective.
Consumer perspective. What do you mean by that, Joey? If you could take yourself off mute and if you don't mind just letting us know what you mean by that, I can have a discussion around it.
What you're offering is insights, is what they're saying.
Yes. Yeah, exactly. That's exactly it. But I do have to be very clear, what I can give as far as advice. And I think I've said this in past sessions. If you're looking for an opinion, ask a friend. If you're looking for advice, ask an expert. When it comes to car insurance, I am a friend giving you an opinion. Okay, we've got to think about it that way. But I hope that I'm giving you, a lot of what I'm giving you right now is based off my own experience. So I hope that some of my opinions are at least leading you in the right direction, which should be to shop around, to ask questions. And at least if you have some of this in mind when you are shopping around, you're a little bit ahead of the game. Knowledge is always power. So you get to, you can ask more of the questions that are pertinent, rather than finding out after you're into an insurance policy for 6 months that it didn't really fit what you thought it was going to give you. Okay, that's the goal here. Any other comments or questions there on insurance? No? Okay, we're not going to do the activities. Well, we'll take a look at this one. Price versus cost of a vehicle. So these are things that we have covered. What we haven't looked at is the depreciation of a vehicle. So what is depreciation?
Nadia said loss of value.
Yeah.
And so the delay, I don't know.
Yeah,
I'm sorry
exactly.
if I mispronounce any names.
It is loss of value, and vehicles lose their value fairly quickly. Some hold their value better than others. And when you think about resale value, regardless of what type of vehicle it is, so even if you're buying, let's say, a Honda Civic, everybody knows how many Honda Civics are out there because they're so reliable. Same with Toyotas. They're just really reliable, well-known vehicles. They hold their value better than other types of vehicles or other brands of vehicles. However, if you buy brand new, the minute you take that vehicle into your possession, it loses its value, or it loses some value. So when we're talking about depreciation, that's one of the reasons why you want to either pay for the vehicle outright or make a down payment. So if you're buying a vehicle for, say, $20,000, your price tag says $20,000, you then have all of the extra amounts that add up to the total cost. You finance that total cost of a vehicle. You're already financing or owing more on that vehicle than its sticker price. As soon as you take ownership of it, it's going to lose a few $1,000s more and depreciate. So again, as soon as you drive it off the lot, you owe more. If you financed it 100%, you owe more than what it's worth if you turned around and tried to sell it tomorrow. So you want to be very careful and think about depreciation and how that's going to affect your vehicle and how much you should be financing. Okay, what we often see is people get into a bit of a cycle where they've purchased a vehicle, and say they purchased, a big truck at $75,000. They financed it 100%. 5 years, they go to trade it in. It's kind of beat up. They still owe, let's say, $30,000 on the vehicle. The dealership is only willing to give them $15,000 on it, and they're going out to buy, a new truck, thinking that they're doing the right thing and buying only a $60,000 truck. Well, they still owe $15,000, or sorry, yeah, they're still going to owe $15,000 on that existing loan, because the dealership is giving them such a lousy trade-in, basically. So they don't just finance the $60,000 of the new vehicle, they have to add on the $15,000 that they're still going to owe from the past vehicle. So again, a $60,000 vehicle that as soon as they take ownership of it is going to be $55,000, but they owe $75,000 on the loan. We see that a lot. It gets into a cycle, and people don't keep the vehicles as long as they thought they were going to keep it. They finance 100%, and they get into this cycle where they owe on a loan that's double the price of the vehicle that they're actually driving. So you want to be careful of that and consider depreciation as well. Okay, any comments on that one, guys? No? Okay. I think this is a great time for a break. We're halfway through. So how about if we come back at 10:05? Okay?
Sorry, can I ask a quick question?
Sure.
To buy or to lease, which is more advisable?
That depends on your situation. Okay. So you would have to look at the terms and conditions of both, and you'd have to look at your personal situation. So leasing can be really good if you don't have credit, for example. So getting, say it's your first loan or your first credit, and they're not willing to finance it because you don't have a credit history, well, then leasing is a good option, because leases do show up on the credit bureau and it can help establish your credit. Or if you're looking to reestablish credit because you've had poor credit in the past, that can help as well. If there's a better interest rate that they're offering on the lease and it's significantly better, that could be the better option. There are a lot of different reasons why leasing could be a better option, but again, it comes down to anything, like anything else with your finances. It's very personal and individual. So you need to look at your particular circumstances. You need to look at the vehicle that you're considering that on, and you need to ask the person that you're purchasing them from or the dealership about what the two options are, so that you can compare both options side by side. Okay, does that answer that question for you?
It does. Thank you so much.
Perfect. All right, so let's take a break here, guys.
Can I just say one thing quickly before we go to break?
Sure.
Hi, everybody. Do you mind exiting out of your viewing screen, please, Myra?
Oh, you mean
Or if
stop share. There we go.
yeah, sure, perfect. So guys, I want to say really quickly, last week we had to cancel the session, the ice storm, the weather, the electricity. We were having lots of issues. So what's going to happen is we're going to continue our sessions for one additional, well, not really one additional week, but we're going to make up the session on March the 4th, the last session. So if you are intending, our registration form only goes up till next week, which is the 24th. But we're going to extend by 1 week and go to the 4th for our session 6, so we can make up for that lost week and you don't miss out on anything from the session. So put that in your calendar. It's not in our registration sheet. It's too late to change that now, but I'm letting you know so you can put it in your schedule that we will be here for week 6 session, March 4th. Thanks, everybody.
Great. So let's take a break. Let's make it, I said 10:05 earlier, but we took a few minutes there. Let's make it 10 after 10. And we'll see you guys again soon. All right, I have 10 after 10, guys. Start getting some people back. All right, perfect. I'm starting to see comments pop up there. Thanks for coming back, guys. Any questions about the first part of the session before we continue on? Okay. I'm going to get the PowerPoint back up. Here we go. All right. So before we get into income tax in Canada, there was one thing that I wanted to go back to. And I guess I want to make this comment as well. We're talking a lot about purchasing the vehicle, but everything that applies to purchasing the vehicle also applies to any large purchase. Okay, so things that you're learning here today, you should be able to apply to, you know, purchasing a home or, you know, really anything that you're looking at potentially financing. The one thing that I wanted to really go back to and discuss a little bit more, and we mentioned it, but we didn't get into it, so I think it's worth the discussion, is negotiating on purchasing the vehicle. And one of the reasons that we talked about price versus cost is because a tactic that is used in dealerships to make the sale, basically, is they will talk to you about what your monthly payment will be. So one of the things you'll find that they'll ask first is, well, what kind of a payment do you think you can manage? You say $300, next thing you know, they've got you in a vehicle, your payment's $300, everything's good, just sign here. Well, is it $300 a month for 4 years? Is it $300 a month for 7 years? What's the interest rate? What is the actual cost going to be? And you're paying $300 a month for however many years, but what is that final total price at the bottom of the contract? They don't discuss that. They just tell you what your payment is going to be. So I will tell you, the vehicle that I'm driving right now, it was a great deal. It was a fantastic deal. However, secondhand at a dealership, and my car was going to be a trade-in. So of course they took my keys and they were going to take my vehicle in to have it checked over to see what kind of a trade-in value they could give. And you know, without wasting too much time, I told the salesperson, I work in banking. You know, I need to know all the details of the agreement before I say yes or no to anything. However, he kept coming back, well, this is what your payment will be. And I said, no, I need to know what the total cost is. I want to see the agreement. And he would go, you know, like they always do. They have you sit down in the cubicle or the office. They discuss everything with you and they say, oh, I just have to go to my manager. They leave you sitting there for a good 5 minutes. And then they come back in and they say, okay, this is what it is. We got the deal for you. And you sign and you go away happy without knowing the actual terms and conditions. So be very careful. Make sure that you are looking at that full contract. It's usually a 1-pager. You want to look at the bottom right-hand side, and that shows that total cost, the taxes, the registration, the license plate, all of that stuff to get that car under your name for ownership. Okay, you need to pay attention to that. So the vehicle that I bought, I was willing to pay X number of dollars on it, all in my name, me driving it away, X number of dollars. And I told him that. And he said, okay, not a problem. Came back, this is your payment. When I looked at that bottom right-hand corner, it was $5,000 more than what I told him I was willing to pay. I was like, no, no, no. I've told you, I'm only going to pay this amount. There's 2 hours of negotiations. Do not be afraid to negotiate and stick to your guns. It was 2 hours of negotiations with this guy. And at one point he came to me and he said, well, we don't have a deal. We're $1,000 apart. You want it for this, we want you to pay this. It's not going to happen. But what he didn't do is he didn't bring my car keys back to me to say, we're not doing this, and dropping my car keys in my hand so I could leave. He kept my car keys so that I would stay. So I knew they were going to do the deal for me. It took, I think it was another half an hour or so after that. But just keep your eyes and ears open when you're dealing with people on anything. Okay, you need to make sure that you're keeping your wits about you and you're looking at the full contract and the actual cost, not the price. Okay, so any questions around that? There's a lot of tactics. There's a lot of articles out there about tactics at car dealerships. And I'm not saying that it's a bad thing. It's part of them doing business, but you need to be aware and you need to educate yourself. And that's part of why you're at these sessions. So any questions around negotiations or things to watch for when you are negotiating? No? Okay, it can be a very intimidating process, but it's definitely a process worth going through. You'll get used to it the more you do it. And just know what your bottom line is and stick to that. There's always another car around the corner. Okay, so let's talk income taxes. How many of you do your own income taxes? If you want to do a show of hands. So a few of you do, that's fantastic. Do you guys, how do you do your taxes? What programs do you use? Are you, or I guess, apps or websites? What's available out there to help you do your taxes? Okay, I see a few things are coming in through the chat.
Adam said TurboTax. Laura said Studio Tax. Christopher said H&R Block. Nadia said TurboTax, and Bayen said TurboTax.
Okay, excellent. A little tip: keep an eye on your bank's online banking or even the mobile app. Sometimes offers come up, and those offers will be for discounts on using those tax preparation websites.
Carrie said that they use the paper that CRA sends out and send it by mail.
Excellent. Actually, that's not a bad thing. If it's your first time, especially if it's your first time doing your taxes yourself, paper-based is actually really great. I used to do paper-based myself. It's great because they send you the booklets with the instructions. When you use H&R Block or TurboTax, it explains a bit to you, but it's basically, and even these days, you can just automatically have everything downloaded because your T4s go to your CRA My Account, or My Account through CRA, and you can upload those to your tax preparation website or app automatically. You don't even have to think about it or really know why you're inputting certain things. So the paper-based makes you understand how you're doing your taxes and why you're putting numbers in certain places. And it gets you to do a few of the calculations by hand as well. So you'll get a better understanding of what your taxes are about. You know, definitely the applications or the apps and the websites, they're really good at finding, what's the word I'm looking for? Tax breaks or things that you should be applying for that maybe you weren't aware that you should be applying for. They're great for that. Make it a lot easier in that respect. But paper-based is a really good exercise to learn exactly what it is that you're inputting and why. There any other suggestions of places, or has anybody taken a look at their online banking lately and noticed any ads or incentives to use a particular website? No? Okay. So everybody does have a responsibility to do your taxes in Canada. How many, show of hands, how many of you have the CRA My Account? Great, quite a few of you. Fantastic. That's a really, really useful tool. So number one, you know, if T4s are submitted, you don't have to wait for it to come in the mail or be provided to you in paper copy. CRA usually has them pretty quickly, so you can get your taxes done that much earlier. You know, you don't necessarily need to hang on to them, even though you should hang on to your records for 7 years. It shows you all kinds of things like what room you have available for a tax-free savings account or your Rsp contributions. It can even show you if any checks have been issued to you that you haven't cashed, and you can claim those amounts. So there's lots of great tools in there. You know, if you're looking at financial planning and thinking about retirement, it will show you based on your current status right now, how much you would get in CP or Canada Pension Plan and old age security. There's all kinds of information there for you. Is there anything that anybody's found on their CRA? Oh, actually, what you can do there as well is it will show you when your taxes are processed, and it will show you if there is a need for any adjustments. If you need to submit more information, you can do it right through that account. It's just a really, really useful tool. Is there anything that anybody's found on the CRA My Account that they found particularly useful for themselves? No? Have you guys explored the CRA My Account that much, or do you just use it to see what your return is when it's coming in? Okay. Well, I hope that, you know, that prompts you to explore it a little bit more, because there is a lot of information there that is going to be really helpful, especially as you move through your careers and your financial planning goals. It's a tool that you'll use at least what, well, I'm going to say once a year. You use it once a year for tax purposes, but you'll use it for your financial planning at least once a year as well. So there's some terms that are specific to your income taxes. Tax slips you're probably familiar with, but what kind of tax slips could you have?
Nadia said T4, Cassandra said T4A and T4E.
Mm-hmm. And Cassandra, can you tell us what the difference is between those, or what each one's for?
One is employment style income, and the other they think summarizes all other things, curve, etc.
Yeah, you can get a variety of T4 slips, and they are for different types of income, absolutely. You can also get T5s. What else could you have? You know, people might not consider it to be actual tax slips, but you would still need to hang on to this information and use it for certain sections of your income tax. What other kind of things could you have?
Cassandra said things you can claim. Pamela said medical expenses.
Mm-hmm.
Nadia said dependents.
Yes.
Cassandra said claims, childcare, student loan, interest, etc.
Yeah, absolutely. You need slips for all of that stuff. So interest earned, interest paid.
Carrie said RRSP.
Yeah, your RSP contributions. If you work and there's a pension, your pension contributions, which usually come on your T4, but you may have something separate. Definitely your medical expenses, your tuition. If you're transferring your unused portion of your tuition to your parents, for example, there's a slip that you need to provide to them. There's all kinds of things that can be included and that you should be keeping in your records for at least 7 years. Anything that you use on your income tax return needs to have proof. Whether you actually supply that proof at the time of submitting your income tax return is different from whether they will come back and ask for it later. So you do need to hang on to it. Okay. Any questions about the different tax slips or if something should be held on to or shouldn't be held on to? Okay, and while we're waiting for questions, I do want to qualify as well. I am not a tax expert. I am not a tax accountant. This again is going to be an opinion based on personal experience, okay? And just, as banking where we do lending, we do ask for a lot of information from your taxes. So your notice of assessment can be requested as proof of income. Your T4s can be requested as proof of income. So these are things that I'm familiar with, but I'm not a tax expert. Okay, do we have a question there?
Carlos does have a question. They asked if they came in for the first time and opened a bank account with new funds from the money they brought from their home country, how is that presented, or how should they hold on to or present that?
Okay, so that's a bit of a myth, and I hope that I'm understanding your question correctly. So we do not report any bank. Okay, so where do I, sorry, it's a little bit off topic, but I do want to address it. So due to anti-money laundering legislation, any transaction that is over $10,000 Canadian, so even if it's US or euros, we're talking about the Canadian equivalent. So if it's 10,000 or over, we are required to report that as a large transaction. Okay, sorry, a large cash transaction. So as a bank, we are regulated and by law required to report that to the government. The exact same that if you are traveling and you come into our country and you have cash on you, they will, if they find out about the cash or if you haven't claimed it, they will ask for you, they will ask for all the cash you have on you, and they can, Canadian Border Services can actually count that cash. And if it's over 10,000 Canadian equivalent, it is required that they report that to the government. And if you didn't claim it or didn't report it at the time of your entry to the country, then you could have fines for that. But as a bank, if you get the money in here for whatever reason or however, and you bring it to the bank and you open a new savings account and you're putting 10,000 or more, we are required to report that due to anti-money laundering legislation. That is as far as it goes. It is not reported to Canada Revenue Agency for income tax purposes. None of that comes into play. It is anti-money laundering legislation only. Okay, so a lot of people have this belief in a myth that if you deposit a certain amount of money, we're going straight to the government and tattletaling on you and CRA is going to take it. That's not true. Okay, that is absolutely not true. It is anti-money laundering legislation that we abide by, and that is not related to Canada Revenue and your income taxes. Okay, so does that answer your question? I hope so.
Yes, it did.
Okay, awesome. All right, so what are deductions as opposed to credits for your income tax? Do we have anybody that wants to attempt explaining each of those? All right, I'm not seeing anything pop up. So an example of a deduction would be,
Pamela just said deductions are deducted from income, credits reduce taxes owing.
exactly, yeah, that's a perfect example of the difference, or sorry, a perfect definition of each of them. So deductions are things that reduce your income. An RSP contribution, dependents. Although dependents could actually fall under credits. Just to be very simple on this, deductions would be an RSP contribution. So that immediately, if you made $50,000 this year, you made a $5,000 contribution, immediately your income reported gets reduced to $45,000. Okay, that's how deductions work. Credits actually reduce the amount of tax. So a credit would be, I'm sorry, I'm just trying to think of a really basic example.
Pamela said donations and medical expenses.
The medical expenses would fall under deductions because it has to be a certain percentage of your overall income, and then it reduces your income after that up to a certain percentage. The credits would be more, the donation could be seen, yes, I believe the donation would be seen as a credit. I'm thinking more along the lines of, just trying to think if that's a really good example or not. Ultimately, what it comes down to is the credit will reduce the amount of taxes that you're going to be paying. So I'm thinking more along the lines of the disability tax credit. So if you have a disability and you've applied for that tax credit, it has to be approved by the government, but it does reduce the amount of taxes that you would be paying.
Yeah, Bilkis said new home buying and senior credit.
Yes, yep, those will qualify as well. Yeah, absolutely. Great, thanks guys, you really helped me out there. What is your notice of assessment? Okay, I don't have any takers on that. So your notice of assessment comes after you've done your tax return and the government has done their full assessment and either agrees with your tax return or has made the adjustments. So it comes back and it basically gives you a summary of what you've submitted or what they've agreed to on file. So the notice of assessment will show what you reported for income that tax year. It will show certain deductions, and it will show other key things like what your RSP contribution room is for the next year. Okay, a notice of assessment can be really handy too. Banks do ask, or lenders ask a lot for notice of assessments as proof of income, especially if it's, you know, if you have more of a complicated income. So if it's not just one source of income, or if you have investment properties, if you have rental income, if you have a lot of commission or bonuses in your job, and that makes up a lot of your income, the notice of assessments can come in handy because that tells us what the government has accepted as your income. and basically what you've been able to prove as your income. Okay. And your tax return is exactly that. It is what you are submitting to Canada Revenue Agency for your taxes. It's all the information that you have and the calculations that you worked out, or the information you put into whatever website you use, and you submit your tax return. Okay. Any questions about any of those terms? No, any questions about filing your income taxes in general at this point? Okay, we have kind of a quiet group for Friday morning. It's a beautiful Friday morning though. Is there one question there?
No question, Joey, just saying, all good.
Good, perfect. Okay. So let's go over this. I said when we started this, when I was going over the agenda, that this is talking about income taxes is actually really timely. When are your income taxes due? Yeah, you're on.
April 30th is what we're getting in the chat.
Okay, perfect. Yeah, for personal income taxes, it's April 30th. Okay, it's a little bit longer if you are in business for self. So you own a company, it can be a little bit longer. But April 30th for most of us. Does anybody know the date that your T4s are required to be out or sent out? So not that you have to receive them by, but they need to be sent out by.
The answers we're getting is February 15th or 28th or March.
February, the last day of February. Yes, the last day of February is when they have to go out. Okay. So that gives you, a little bit of time to get the tax, your T4s or income information, and some time to actually do your taxes. You can, of course, do your taxes if you get electronic payroll information, because often all that information will be there on your December 31st pay stub. Okay. So you can mock up your taxes, or you can do your taxes based on that information. If your T4 differs a little, you can always amend that. You can, or, CRA will definitely amend it for you if it's in their favor. They will, either way, they will amend it for you, but as long as they have the T4. So again, T4s need to be submitted to CRA directly by your employer. That's their responsibility. But you should be getting your copy sometime after February 28th. So February 28th is the last day that they have to send those out. Are there any other dates that we need to keep in mind around taxes? Okay, what about
Pamela
Rs?
said if you owe money.
That's a good one. Yep. If you owe money, then they definitely want it by a certain date, and they will charge you penalties and interest if you don't get it to them. Absolutely. What about RSP contributions? So if you're making RSP contributions, you have up to a certain day of 2022 to be able to use that contribution as a deduction on your 2021 income. Does anybody know the cutoff date?
March 1st, or then Pamela said must contribute by February 28th. So mixed responses.
Yeah, generally it's March 1st. Generally, if it's a leap year, they sometimes make it February 29th. If March 1st falls on a weekend, then they'll make it the first business day of March, things like that. So it does adjust from year to year, but generally it's the day after the T4s need to be out. Okay, so that is something to keep in mind moving forward. Any questions about those?
When do our tax slips from the Mount have to be out?
Tax slips for your tuition or
Yeah, is that
something?
also the end of February?
I believe so. But is that not something that you would get off of your student account?
I think so. I just didn't know if they had like a timeline when that stuff had to be uploaded as well.
Yeah, generally when it comes to, like, are you speaking just for, if it's for tuition, then
Yeah.
you have your tuition receipt in your student account already.
Oh,
because
okay.
It would have been your 2021 tuition that you paid.
Yes.
You can't
Okay.
use
Yeah, that's
2022,
okay.
so, yeah, it should be there already. But
Okay.
that's a great question. Yeah. Do we have anything else in the chat there?
Joey said no by the last week of February for our T48A.
Okay. All right, perfect. Thanks for that. All right. So, important questions, general questions that people ask. So do you need to do your taxes? We always say yes, but are there situations where you don't necessarily need to do your taxes? Now, so basically, if you have an income, you need to do your taxes. So even if you are a dependent, so for example, when my children were still living with me and even in high school, they had jobs, so they had to do their taxes. And what that does is that allows the government to see whether they really are dependents and whether I can claim them as dependents or not. So if you make over a certain amount, then you are not necessarily considered a dependent, even though you're under the age of 18. And let me rephrase that. That was poorly phrased. My apologies. If you're under the age of 18, you are considered a dependent. However, if you have a job and you've made money over a certain amount, your parent or legal guardian who is claiming you as a dependent cannot use the tax credit for a dependent if you've made over a certain amount. Okay, so it does have tax implications. That's why you need to file your taxes if you have a job. So we've already talked about when your tax return is due. Do you need help doing your taxes? Definitely those websites we talked about are fantastic. They're really simple to use. But like I said, I do suggest that everybody try and do it paper-based at least once to understand the whole process better. And how do you complete your benefit return? We sort of went over that. The websites, again, are fantastic. You do have the options to go paper-based. You can net file, which obviously is all electronic. There's all kinds of different ways that you can do that. If you were to go in person to H&R Block, they net file for you, or to go to an accountant, they do those parts for you. Any questions or comments there?
Joey just made a joke that if you'd like to go back in time, that's when we don't have to pay it.
Yeah, yeah, exactly. There's lots of things we could do if we could go back in time. All right. So the main steps to filing your income tax return, the hardest part, the absolute, and I swear, nobody will say anything different. The hardest part is collecting your information and your documents. As organized as I try to be, my documents are everywhere. They're everywhere. Especially when you're talking about medical receipts, you know, if you have a special circumstance. So for example, I have celiac, so I can claim a certain amount, well, I shouldn't say a certain amount. There's a calculation I need to do to be able to claim gluten-free food as a medical expense. So I would have to keep those receipts. I would have to, you know, do some extra filing, I guess, if I was on top of those and really organized. But definitely collecting your information, your supporting documents can be tough. Keep in mind, if you think you should have something and you can't find it, go back to that company or that employer and ask for a copy. They can always provide a copy. Check your CRA My account first, see how much of the stuff they already have, and then, you know, you don't have to look for it quite as hard. You can look for it after and still get your taxes done. Okay, but you should have your supporting documents on hand in case you get audited. Okay. Selecting your method, again, paper-based, going to an accountant, going in person to a place like H&R Block or the Taxman, or doing it yourself online. Even if you're doing it yourself online, excuse me, you still have to choose at what level. I know I tend to use H&R Block. So they have different levels of assistance. You can go very basic and you pay, I think it's $20 and you do most of it yourself. You can go one step up and they will actually give you a few more suggestions about how to maximize your tax return. If you go the next step up, you have access to advice, I believe, through chat with a tax person or somebody who was trained by H&R Block. So depending on how much help you feel you need, you know, maybe the first year or 2 years, you really you go with the higher level. So that until you get used to doing that yourself. And then after that, you just take the least or the basic level and do it yourself from there because you have a better understanding of it. You do want to make sure that your information is up to date. So when you are filing your taxes, you want to make sure that your personal information is up to date. So where you live, your marital status, you know, whether you're consenting to share the information for voting purposes, all of those sorts of things you want to make sure is up to date. Because if there's a discrepancy, it can delay things for your tax return. It can make things a little bit more difficult down the road for that year. You know, just like with anything else, your information should be kept up to date. Especially when it comes to your marital status. Pay attention to those questions in the first few pages of your income tax. It is all about your personal situation, your personal information, and whether any of that has changed. So if it has changed within the year, up to and including December 31st of 2021, then you need to change that information for your tax purposes, okay? Reporting your income. That's much easier these days than it was in the past, simply because of the CRA My account and they collect your T4s. Double check though, because not all your T4s may be there for whatever reason. So make sure that, and sorry, I say T4s, but that includes the T4As, T4Es, T5s, any income documents for tax purposes. Make sure that it's either there under CRA My account and getting reported, or you need to input it yourself. Okay, but make sure that you're using all of them. You wanted to identify your deductions, and that's basically what calculates how much your taxes, or excuse me, taxes owing or tax refund will be. Any questions so far? So you're going to send your tax return off. Again, you have choices there: net file, mailing it. You know, if you went in person to somebody, they'll take care of net filing for you. You do want to keep your supporting documents. And again, we mentioned this before, but how long do you keep those? Anyone remember? How long do we keep our documents?
Seven years seems to be the answer.
Perfect, guys. Thank you. And if you're anything like, I bet you, if you ask your parents, I bet you anything, they'll be like, oh, well, I just put them away. I'm sure I have at least 10 years sitting there. You start putting the files away and you don't think about going through them once a year and throwing the oldest one out, right? But 7 years is all that's required. Hopefully you get a refund back. If you don't get a refund, then you do need to pay attention to what you owe and making sure that you pay that on time to avoid penalties and interest. Okay. And then with getting your refund or finding what you need to owe, that's when your notice of assessment should come to you as well. So if there's any discrepancy with your notice of assessment, you can go back and make changes. And again, you can do all of that through the CRA My Account. So if you don't have that, I suggest that you do try and set that up. It is a really useful tool. Okay, and making changes is actually quite simple. I've had to do that a couple of times. And all you do is upload the new documents or the supporting documents to the file at on your CRA My Account, and they take it from there. And they do emails back and forth. It's really quite simple. So that's doing your taxes. Any questions about that, guys? Okay. I'm gonna stop sharing. Well, that brings us, we've got a few minutes, so if there are any questions, I'm happy to stay on. I'm going to put in the chat, I'm going to put my email address again. So if you do have any questions, especially if there's anything that you want to talk about that's your own personal situation, I am more than happy to give you some time around that. I hope this was helpful. I was really happy to do the sessions again. I really appreciate their participation. It makes my job here much easier. And I hope everybody has learned something over these sessions, or even if you've only joined for one session, I hope that we were at least able to give you something to think about. But thank you very much, guys. And certainly it's a beautiful day. Get out there and enjoy it a little bit.
Perfect. Thank you so much, Myra. And I just wanted to give like a huge thank you because I know it's your last session with us. And thank you so much for volunteering with us again.
Absolutely. Anytime, I'm happy to do it. All right, guys, have a great day.